Hi, it's Jeff Vogan from Premier Retirement Planning and Wealth Management. It's Tuesday, so here's the tip of the day. Asset allocation, diversification, that's kind of a buzzword we've heard forever in planning for finances. It's good not to have all your eggs in one basket, although right now, if you have all your eggs in the stock market, it seems like there's no end in sight. We're almost back to previous highs, fastest recovery ever. We've had some help with maybe an executive order with a stimulus package kind of reset, at least with unemployment and with Social Security taxes and things like that being waived, eviction notices and things like that that can't be levied to kick people out. There's been a few changes that have kind of stabilized the economy a bit and probably helped the market a little bit more. Nevertheless, many of you feel like the market might be a little bit overpriced and want to move into something a little more safe. Well, what about bonds? Gosh, what about bonds? Bonds are paying such low interest, like 1 or 2%. I mean, who knows? Bonds might even go negative like some of the other countries in the near future while we get the economy, the actual economics back on track. So with bonds being kind of in the tank and being your safe alternative, which is typically the old school Wall Street way, you might want to consider principal protected options that I mentioned before, the indexed annuities as a bond option. The indexed annuities are actually secured by bonds. That's what the insurance company puts your money in. In fact, they've got a whole portfolio of bonds that they can buy with more efficiency. They get a better return on their bonds than you and I can get buying them on the street. True, they do. And they've got a portfolio that they bought over the years that probably generates a much higher rate of return than what you and I can get currently. So why not let the insurance company invest your money in the bonds and use the interest that they make on your bond portfolio in an indexed account? Well, that's exactly how they make an indexed annuity work. Indexed annuities are a savings account with an insurance company, uses the underlying security of your account is done with bonds, safe bonds, investment grade bonds, and then they take the interest and they bet on indexes. Now, I would suggest that if you're going to look at indexed annuities now, there are some really cool new products out there that use daily reset annuities, indexes. In other words, they use multiple indexes that they can rotate in and out of depending on how the sector of the market does. If stocks are getting hit hard, they move out of the stocks and they move into more of a bond sector or maybe a foreign stock sector. There's others that go into different ETF models that use biotech, tech, transports, consumer goods. Whatever the sector that's doing well, they weight to that sector. And these indexes have actually outperformed the market in the last year. They are a lot less volatile. They can be used on principal protected accounts. So if you're looking for a bond alternative, consider index annuities, but also use indexes that have a multiple set of indexes within the index that can be maneuvered throughout the year to protect against losses during the year and give you a better chance of winning every year that you have that annuity account. And remember, always look for indexes that are uncapped. In other words, you want the most of the growth. You don't want the company to get most of the growth. You don't want to be capped at a certain level. In other words, you don't want your best case scenario only to be 3 or 4 or 5%, even though that's better than what bonds are paying. You want that upside potential to be double digits or more when the market's good. So remember, uncapped indexes, multiple indexes within an index, and also a dynamic ability to reset those indexes and reweight those indexes throughout the year. Those are the tricks to picking the right index and the right index product. Need help? We're experts in the annuities and how to pick one right for our clients. We'd love for you to give us a call and we'll help you pick the right one too.